Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just want to go over the pump on the stock market chart because it is continuing. Of course, it is the weekend and we do have a long holiday weekend here in the United States. However, the signs in the market are still very positive. And of course, this is something that we've been predicting here at Alpha Commission. If you go ahead and check out the old LARP lines, we do see that I've had this marked out, I think somewhere around here, so around the 15th or so. I drew these lines where I thought maybe there could be a possibility that the next bounce would be the rise, but then just realized that it was probably going to have to put in a triple touch before we got this rebound. And sure enough, that's what happened. And so there was a slight delay, but looks like everything is on schedule. And if you're in the stock market right now, even these more risky plays are tending to pay off. And we do see, of course, Microsoft, Netflix, even Twitter, and to some degree MicroStrategy benefiting from this. And of course these are risk on plays, right? These are riskier tech plays at a time when tech is not doing that well. You see Tesla just pumping, right? Nvidia also reaching a little bit of resistance there, and Apple, of course, as well. So, guys, this was a nice relief rally. It was due. It could be that we're just doing something similar to what we did, in very early May, late, April. So, always be taking your profits, right? What do we say here? Always be taking your profits. That's the motto of this channel. And of course, we are in a macro downtrend, so this is by no means over. And if you look at the whole chart of the NAS 100 here, it's just a drop in the bucket. It's a nice one, right? It's a nice one, but we're not there yet. This isn't a recovery. This is a relief rally. And so eventually we would expect this to turn around. Now, on some of these charts, as I've been pointing out, there are gaps up here. For example, on the Russell at 192, we've got some gaps here at 4270 on the SPX, and of course 4250 on the SPDR. Dow Jones similarly has a couple of these quarter day gaps in their charts. So do we have some stretch goal that we could reach these areas? Potentially, and then make a turnaround. This would be quite a good relief rally. It's a little bit unfortunate that Bitcoin and crypto isn't really joining in, but there's reasons for that. The market just isn't risk on right now. And additionally, there was, of course, some other things going on in Bitcoin land, which was basically the options expiry on Friday. And the bears were just significantly better positioned in order to keep the price down. And I think they got some ridiculous amount of money, like a 300 million or 600 million dollars or something, by keeping the price below $30,000. And so now that options expiry is out of the way, could we potentially see Bitcoin free to pump? Well, it already has been, starting to do that. You can see that we're back in this kind of range. Of course, I keep fiddling with it. This is not an exact science. There is no one shape that's going to make the most sense. When you're doing these things, you can see obviously there's this, this just horizontal channel, sort of like that. And you can see we dipped out of it, we almost lost it, and now we're kind of back in it, right? and we do seem to be holding it, so that's a pretty good sign. We have these kind of resistance points here at 29,500, 30,500, 31,300, and you can consider these to be very significant markers. We also have 27,900. If we break below that, that's not good. Then maybe you could expect, to be falling as low as 25,000 again. And by the way, if I said 100, I meant 1,000 or something. Okay, guys, I just wanted to give you a couple levels to look out for. And then, of course, as we analyze this wedge, we will be looking to see if the price can get back to the top here. If we can break above that 29,500, that would be a good sign. And then, of course, that 30,500 is a next boss. I'm still thinking that the same principle is applicable as since the last 2 weeks, which is basically we could eventually see a pump to like 32,000, potentially 35,000 ish. Um, I'm not betting on that. I'm just saying it is actually quite possible, but that we do have that bear flag pattern still on the charts. And so that means that, in this macro downtrend with all of these, macro pressures on our shoulders, uh, you know, the overall momentum, especially on the weekly and the monthly, is in that downward direction, which could push us to that $22,000, $23,000 level. I've marked it here as 23,000, approximately 200, so 23,200. If you wanted to just get a range, maybe 25,000 to 23,200. And then below that, we might be talking about the 20,500 to like 19,000, maybe 18,500, right? And those would be two ranges that I would suggest are reasonable DCA points, under the current setups that we have going on in the charts right now. Uh, and then, of course, for resistance, I still have this area up here, which I can bring down just a little bit. And we're basically just hashing it out in the middle, okay? So, yeah, not much else to report. Everything has been pretty similar. The main focus has been these kind of pumps in the stock market and the fact that Bitcoin has not been going along with it. But again, like just because Tesla does something or Apple does something, or Nvidia does something, it doesn't mean that they're not highly associated, that they're not, highly dependent upon the overall stock conditions. Bitcoin could actually be being supported and uplifted right now by the stock market. This asset is the most risky asset of all the tech classes, right? I mean, obviously altcoins are, right? Like the Luna and blah, 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 right? Like those altcoins are the most risky. But in terms of what just regular people are trading, the regular retail, they know Bitcoin, and if they're trading Bitcoin, that's probably the riskiest thing in their portfolio. Some of these more conservative institutions, Bitcoin's the most risky. And so if you were going to be risk off in a downward market, you're probably going to get rid of your Bitcoin first, okay? Because to be honest, it does trade like a tech meme stock. It does not trade as a store of value except over longer periods of time. But in any one downturn, it actually gets hit the hardest. Okay, so that's kind of the catch 22 of Bitcoin is that it actually gets hit the hardest, but because it's such a young class of asset, that it does have a long way to still increase in value especially crypto in general. And so over time, it may hold up better. So, we'll see how this all gets parsed out, but it was potentially in a setup to be dumped to 22 to 23,000, and it may be that the stock market has just come to the rescue of Bitcoin in this kind of relief rally that they're experiencing, and that this thrust in the NAS 100 and in some of these other indices have actually just saved Bitcoin's butt from dumping. Okay, because this was looking really bad. And if we do, fiddle around with this kind of support here, it's not 100% clear that we're actually out of the woods yet. Okay, so you can consider this to be a support, and maybe these are kind of like wicks below. Um, in which case, you would have a situation where you have the support, and then you know you just kind of like middled around in there, and then you lost support, and now you're retesting the bottom of that support. And that could bode poorly for the next move, which, if the stock market does drop, then potentially, this could be rejected from re-entering this wedge. And so that's why I say, be open-minded to different, kind of, you know, drawings of this wedge, because this is one drawing, right? Like we can kind of see this downward channel now. I think this is kind of appearing. And, you know, most people had it, flat originally because this was, these touches were all in, just horizontal. Then it started to rise a little bit, so they kind of gave it like this type of a look, right? Which, did that make sense? Okay, it made sense for this touch and this touch and this touch and this touch. That made sense. But look, you have to continuously redraw these things, because it's again, it's not science, okay? This is just a conceptual construct. It's just a mental construct to help you plan your entries and your exits. It's not something that's fixed in stone. Most of these patterns are BS, okay? Like most of what pattern traders do are actually just psyching themselves up. It's actually more like using geometry in place of like price logic, right? And you can do that because the momentum of how money moves in these systems does seem to have very geometric patterns, and whether that's largely due to just collective human, behavior, or to bots or algorithms or whatever, that geometry does exist. It's just that it's a social science. It's not a hard science. It's not a physical science. It's a social science, right? So this is a liberal art, right? And you have to understand, like, this is people and psychology, and so it can change day to day. And so if you're seeing like people redrawing these things, and that's confusing you or doesn't make sense to you, where, are we above support? Well, we have this touch, this touch, this touch, this touch. You can consider that a touch, and then we're kind of sitting on top of it. So yeah, we're inside of this wedge. But if you look at this channel, you know, well, you could make an argument. There's a wick right here, right? There's a wick right there. You could make an argument that something like this is going on, and you can line it up something like this. And so then you could see this kind of pattern, right? And then that would be highly confluent with this resistance here at 29,500. And if you were able to get on top of that, you would consider that a breakout, right? So just be open-minded. People are going to draw these things differently, and it's not 100% clear which pattern we're in exactly. But the takeaway here is that Bitcoin does need to break to the upside. It does need to take out a couple of these levels. I would be much more confident if we were able to take out 30,500 than this 29,500, but 29,500 would be a good sign. And my concern here is that if we follow this wedge, right, which I had just drawn out, then if we get rejected here, then the next place of support is this yellow line at 27,900. And if we lose that, then we go down. So for me, regardless of how you draw any of these geometries, I'm still looking at 27,900 as the line in the sand for the downside. And for upside, I really want to see, us to take out that 30,500. Again, I'm repeating myself just to make sure that it's clear and using different phrasings just to make sure that everyone understands. I'm still not seeing anything particularly positive going on here. That's interesting. We did have a sharp downturn and we are starting to pump a little bit where I had drawn this line. And I was comparing that to a historical pattern in the past. Where was that one? Let me go on a bigger time scale here. There we go. Back here, where I really wanted to see the same type of pattern being put in. And look, I actually had drawn this beforehand, so I didn't see the update today until right now. And this, I don't like the green line here, but the red is doing what I expected. Is it just the 6 hour? Yeah, the 6 hour is giving me some hope here. But, well, the 12 hour also. Just the daily doesn't look right yet. Yep. So yeah, let's see if we can get a spike here in the 80x. And then what that corresponds to, which let me show you on the chart here. What that correspond where is this? There we go. What this corresponds to is this kind of like sideways and kind of downish downturn, which then flipped around and became a little bull run, right? So how much was this? 26%. That would be a nice increase. And so I'm really looking to see this pattern repeat, where maybe we've just done a little bit of the sideways action, maybe have a little bit of a dip, but then are able to turn around. What would that look like? And so I'm looking at these different factors, right? Like the CVO and the ADX. And what we can see, and I wish I could just, I think I could have two charts side by side, maybe do that. But it's not easy. Let's see if I don't know what's going on here. I don't like that. Yeah, this doesn't look great yet. So our ADX is coming up, but the CVO is still not looking like a great pattern. We did have something very similar back here, but it should have been rising by now. If we want to see something, yeah, we should start to see an uptick. Otherwise, I'm gonna get worried. Yeah, we're just squarely pointed down. A little bit of rounding, but I want to see a little bit of an uptick here on the daily. Let's see on the 12-hour. No, that was the weird one. Okay. And then for our volatility, I think I can just get an idea just by looking here. It's kind of fully expanded. And here we're fully contracted. So that's a significant difference also. The thing is that this middle line did come from a contracted area. So potentially we could still, I mean, it's just going to go with the directionality of our Stoke, which is still pointed down, but we only need to get to 29,750 to change that. And back here, no, we were fully pointed up by that point. So I'm not sure. Every day that goes by, this pattern, these patterns of potential turnarounds are weakening. And I'm just seeing Bitcoin being very, very weak. So yeah, I don't think our upthrust that we're having right now is over yet. I think we potentially do have some more upside, but we're not even out of the bearish control zone yet. On the daily here, our momentum is still positive above 27,900, so that's good. That correlates with the price level that I had set right there at yeah, 27,000, 800-ish. So that tells me that this number really is that significant. That 27,000, let's just say 27,900. That's a very significant level. So keep that in mind. We don't want to break below that. All right, guys, I'm not going to go too much longer. Just wanted to give a quick overview. Nothing had really changed. This kind of looks like a relief bounce for Ethereum. Ethereum is just continuing to follow my my joking 3 spoons pattern here. Grayscale is just walking down that wedge. If it puts in a pattern like it did last summer, then potentially we could see another dip or two before we have a pump. Not sure how controlling this is of Bitcoin or how influential it is, but I was predicting this back here even. And so far you can see that it is playing out. If we do get a nice pump, that would be ideal, but if it just crawls down here, that wouldn't shock me. That wouldn't shock me. There's a lot of support in this area, and potentially it's going to work its way back down to that support, and maybe Bitcoin will as well. Bitcoin hasn't worked down as far as the grayscale chart has, but this kind of smart money, this grayscale smart money is saying that they're already below this previous high and almost touching the second peak here. Let's go to Bitcoin. And for Bitcoin, that would be like this kind of area, right? That would be like 14,000, 15,000. So I'm not sure if Bitcoin will follow Grayscale all the way down there, but it does suggest that, the smart money thinks that this asset could go lower and that maybe retail is holding this up. And if retail is holding up Bitcoin, and if retail is holding up a lot of the stock market, especially in these relief rallies, then that could be very dangerous because retail does capitulate quite quickly when things turn around. So as soon as any weakness comes back to the market, we could see a shocking downside, right? And I don't think that we're going to see a turnaround in the market unless the Fed lowers the rate at which it's increasing interest rates per month. So if next month the Fed has 25 basis points as an increase, as opposed to the expected 50 basis points, then maybe we can see an incredible rally in the stock market and on crypto. But if the Fed increases it by 50 basis points, I would suspect that this temporary relief rally in stocks is going to turn around, and Bitcoin might turn around with it as retail capitulates. And then if the Fed increases by 75 basis points, which some people suspect it might do, then that could just chase the rest of the smart money out of the market because it would be totally unexpected and things could just come crashing down fast. So again, whenever you see a bounce, whenever you have a nice bounce on whatever you're trading, the motto here is, always be selling, take your profits, and don't get too greedy in a macro downtrend because you don't know when that bounce is just going to just completely flip around and then hit you back harder on the way down, right? Is it even worth it looking at these things on the weekend? Just VIX is in a kind of nice spot that allows for trading. The dollar continues to come down. So, yeah, potentially more relief. And I think I'm going to end it there. Hope you guys have a good weekend. That was your alpha for the day. Stay safe and happy trading.